All right. All right, everyone. Welcome to Making Multifamily Money. Thank you for hopping onto this call. It's a pretty small group to start off with, but to start, I just want to share my presentation I created about my 20-unit apartment complex. I actually recorded it prior, but I forgot to hit record. So I decided to save it for this session. So let me hit share. Cool. So can you guys see my screen okay? Okay, cool. All right. So thank you again for hopping on. For those of you who don't know, I'm Steven. I'm a full-time pharmacy director. I still work full-time. I currently own 90 units of real estate based in California, which is a high cost of living market. I own about 5 single-family homes. I own 2 apartment complexes in Oklahoma. So one's a 26 unit and up in my 20 unit, which I'm talking about today. And I own a mobile home park, which I'm currently in the process of selling in Alabama. So collectively, I own 90 units. I don't have any partners. I purchased 90 units in about 5 years while working full time. And I did it just, gradually over time. So that's just kind of a high level about me. So let's just get started. This is why everyone's here. So I want to talk about my 20-unit apartment complex BRRRR. So this is kind of a case study. I'm kind of going over the timeline of, how I bought it, what my strategy was, and kind of what my exit strategy, which I'm currently doing right now. So here, let's talk about the deal. So I got this off market via direct mail. If you've been following me for a while, I'm pretty big on direct mail. I use PropStream to get my data, and I use a company called Yellow Letters Complete to do my direct mail campaign. If you want links to that, you can reach out to me directly, or when this video is uploaded, just click check down below. Typically, I'll have my referral links. But what I did was I sent out 300 letters a month for about 6 months. So that's around 1,800 letters. It costs roughly $1.50 per letter. With inflation, it's probably around $180 a letter today. And what I did was I just basically pulled lists from PropStream and hit all of Oklahoma. And through my 1,800 letters, which costed me around $3,000, I was able to get 2 off-market apartment complexes. One was my 26 unit and one was my 20 unit. I worked direct to the seller. No broker was involved. And I basically bought each of my apartments with instant equity day one. So on my 20 unit, I actually bought it with $50,000 of equity day one. So I bought it for $350,000, which is really cheap, right? That's about $17,000 per door. I mean, I'm from California. I can't even buy a condo for $350,000 for some context, right? So to me, it's cheap. And when I first bought it, it had about 15 out of 20 units occupied. It had around $5,000 in gross rents day one. And there's one unit that burned down. And what was kind of funny was the unit burned down 5 years ago. It was because of a kitchen grease fire. And the owner was too cheap to repair it and fix it, that he just left it as a burned down unit for 5 years. So he literally did nothing. So, when you kind of go off market and you have motivated sellers, you're gonna have a lot of deferred maintenance. And this is very common, right? Like sometimes the owners, they don't have, $40,000 to renovate this unit that maybe will give you $550 in rent. So for him, he's like, it's not worth it. And also he didn't buy good insurance, right? Like his insurance basically probably didn't cover the repair costs of that burned down unit. And he probably just decided, it's not worth it to make a claim. It's going to raise my insurance premiums the next year. And he just decided to leave it as a down unit. So, fortunately, this is very common when you're buying value-add real estate. So for me, I see it as an opportunity, right? It's an opportunity to buy it right, buy it with instant equity day one, and have the ability to force appreciation through renovation and raising the rents. So, that's exactly what I did. And kind of going back to the insurance for some context, he spent $5,000 a year on insurance. My insurance is $14,000. for replacement cost insurance, right? So that's the key, is you want replacement cost insurance. And let me admit this person, sorry. And anyways, the other 4 units, they basically needed new flooring. So, it was in decent condition, but they ripped out the carpet. It was due to bed bugs, unfortunately. So they ended up ripping out the carpet. And when I bought it, it just had no floor, right? So basically it's uninhabitable. And, the seller was very motivated. So I actually sent him a letter, and he actually, I think 4 months later, after I sent the letter, he sent me a letter back saying, hey, I lost your phone number, I lost your email, but I have your address. Like, here's my number, call me. So basically what I did was I called him, and then, sorry. I called him, and basically he said that, I've owned this apartment complex, this 20-unit apartment complex, for around 20 years. And I'm looking to sell because I just want to dump this money into a business that I currently own. Right. So he basically said, he gave me some key nuggets about me asking anything. I owned it for 20 years. What does that mean? That means that this property can be owned free and clear. Right. If he bought this property on a 20-year amortized loan, by year 20, it could be paid off. So that's opportunity for seller financing. And that's how you buy deals with low or no money down, or you can negotiate your own interest rate. Right. This is very prevalent in today's economy with interest rates. I'm getting quoted 7.5% to 11.5%, right, for my properties today. So, interest rates are terrible. And a year ago, I was getting around 5%. So, you can kind of say that I'm a little bit unlucky with my apartment complex because I bought it a year ago. And who would have anticipated that in, 1 year, which is how long I own this, interest rates would double, like from, 5% to 10%. So, this is how a lot of flippers are getting killed. A lot of people doing what I'm doing, they can potentially get killed as well. So, but overall, he was very motivated. And how you can tell if someone's motivated is that, they're very communicative and they're very reasonable in their request. And the owner, he said straight out the gate, hey, I just want to sell this at tax assessed price. And you've been following me for any period or my channel, I always say, if you offer a tax assessed price, you're usually buying the deal with instant equity day one, because it's usually the cheapest model, right? When you make offers for multifamily, it's either price per door, it's going to be net operating income divided by the market cap rate, or it's going to be the tax assessed price. I usually take the 3 and offer the lowest of the 3, and the lowest is always the tax assessed price, right? So that's how I make my offers. Next issue is lending issues. So I had lending issues when I tried to buy the property, and I'm having lending issues as I'm trying to cash out or refinance my property, right? So it never left. And let me share you why. So first, it's a tertiary market. It's rural. The population's around 50,000. It's pretty small. I mean, it's not really small, but not really big either. The loan amount is too small. So remember, I bought this for $350,000, right? Like, most lenders want a minimum of $500,000 for the loan. Also, the rents are too small. I'm renovated. This apartment's only getting about 500 to 550. I'm actually getting around 550. And they don't want that. They want a minimum of 700. The price per unit's too small. Remember, I bought for 18,000 per unit. Some lenders, the minimum is 50,000 per unit, right? So what's the solution? You have to talk to multiple mortgage brokers, and you have to engage a lot of local community banks, right? So I probably talked to, I was buying the deal, at least 10, 11 lenders that all told me no. I just kept on asking until one said yes, which was my hard money lender. And the financing I got was, 25% down. So it's roughly around 80,000. I'm getting $100,000 for renovation. So that's included, right? 9% interest only. So I think my monthly payment is roughly around $2,000 a month, and I'm getting a 12-month term, right? So I bought this in May of 2022, and my loan is literally due on the 12th, May 12th. So like 2 more days. So, at the time, that's not bad, right? Like 9% interest only for a hard money loan. I'm getting quoted 10%, and it's not even a hard money loan. So it's crazy how things, change in a year. So let's go into my value add strategy. So, when I bought for 350. It appraised at $400,000 day one, right? So the appraisal report came back at 400,000. So I made $50,000 in instant equity. So this is what I mean by buy right. You want to buy it with instant equity day one, so that if interest rates double on you, like it's doing on me, you at least have, some cushion there. And also the rents. So the prior owner was renting it out for $350 to $400 per unit. I actually have one tenant that I just evicted that is paying $250 in rent, right? So like this is crazy to me. Sorry. So this is crazy to me. In Los Angeles where I live, I have to pay $200 a month just for valet parking, and they force you to valet park. That's like half the rent, right? But after renovation, I can probably get around 500 to 550. And that's what I'm actually getting right now to this day. So what did I do, right? I renovate the units. So that burned down unit, it cost me $40,000. And everything's brand new, like new flooring, brand new kitchen, brand new bathroom, brand new everything, right? So that's how I initially estimated around 30,000 for this renovation of the burn down unit, and it cost me 40,000, right? So, things get more expensive. And you always need some cushion, right? And then for the heavy turn, for other units that were vacant, it cost me around $10,000 each. Needs new flooring. My 20 units, all one bedroom, one bath. I have a couple of studios as well. So, if you're doing new kitchen, new flooring, new restroom, it's around 10K. The remaining 15 units, I call it a moderate turn. So that's about 4,000 to 5,000 per unit each. So what's a moderate turn? So it might be like new flooring, maybe a fresh coat of paint. You might have to resurface the kitchen cabinets, reglaze the bathtubs, touch up the kitchen vanity. It's more of a cosmetic thing. And, what I kind of realized during the renovation was I spent $40,000 to have a brand new unit. I only got $550 in rent, right? Versus a moderate turn unit, which I spent $5,000 to renovate. I still got $550 in rent. So at that point, I was just like, all right, I don't need to overspend on renovation, right? My market doesn't call for it. So don't overspend in your renovation. That's where a lot of beginners mess up on, and myself included. But I rent between my two apartments, my mobile park. I've probably renovated about 45 units in 1 year. My first time, right? As a beginner, right? So I'm almost a high level flipper in just 1 year, right? And then on the outside, I just wanted to repaint the exterior because it was looking a little bit faded. I wanted to make it a little more modern. To show that I'm coming in as a new owner and I want to fix this up. Fortunately, my apartment complex that I bought had a bad reputation. The owner was not fixing things. The rents were low. The tenant base wasn't that great. So this is typical, right? When you buy value add real estate, you're gonna have to turn over all the tenants, renovate it, bring in new tenants. It's gonna take you, 1 to 2 years if you're lucky. At that point, you can stabilize it and then do your cash out refinance. So let's talk about what happened when I took over the property, right? So when I bought it, 15 out of 20 units were occupied. But from my experience, buying mobile home park and another apartment complex, after 1 month of ownership, my occupancy dropped to 7 out of 20. I lost 8 tenants in 1 month, right? And nothing I did wrong. I mean, fortunately, when I took over, there was a bed bug infestation, right? One tenant was letting homeless people, spend the night for a favor. And basically I had to evict him. But once the bed bug spread, you have to fumigate all 20 units, right? You can't just fumigate one unit. If you fumigate one unit, they run to the next unit, right? So you have to fumigate all 20 units. So that costed me $500 per unit to fumigate, which is $10,000 total. And remember what the rents were? The rents are $500. It literally cost me 1 month of rent per tenant just to fumigate my 20 unit apartment complex. So it sucks, right? That's terrible, But remember, I bought this property with $50,000 instant equity day one. So that's my cushion, right? And I forgot to mention that initially the owner wanted $420,000, and I brought him down to $350,000. So I dropped him down by $70,000 in the purchase price. And how did I do that? I forgot to mention that every time a bank rejected the deal, I would give the owner the feedback as to why the deal is rejected. After you tell the owner that you've been rejected by 10 lenders, they start to feel discouraged and want to work with you more. So I even talked to his lender because he set a loan on the property. It was a small loan of like $60,000. And I talked to his lender, and even his lender said, you know what, I don't want to lend on this. There's a lot of deferred maintenance because it's hard to get that owner to do anything. Like we had to beg him to replace the roof for insurance renewal. So, I knew there's a lot of deferred maintenance. So when you have a bed bug infestation, you put notices on the doors. Basically, the tenants have to take everything out of the cupboards, everything out of the closet, put it in the middle, cover it, and it gets fumigated. Well, if you're doing all that work, it's easy just to move out, right? And that's what a lot of people did. They just moved out. And then also, when I take over an apartment complex or anyone takes over, tenants always stop paying, right? You always have a couple that will stop paying, and I have to evict them. In Oklahoma, it's a 15-day notice to evict somebody. So literally, I come in, take over, you put the notices that there's new ownership, they're not going to pay, you give them a 15-day notice, and they usually leave within a week before the eviction date. So they're just trying to take advantage of the situation, right? And save a month's worth of rent, and then move on to the next place and not have an eviction on their record. So it's very common, unfortunately, right, with this type of tenant base. So once I took over, renovation started within 2 weeks of ownership. So, I coordinated with my general contractor, said, hey, I close on May 12th. Can you start in June? He said, yes. So you want to be proactive with that, right? Because sometimes on my 26 unit, it took my general contractor 6 months before he started renovating my property. 6 months of me owning it. That's crazy, right? If you're on a hard money loan, good luck, right? That's half your time. But fortunately, my 26 unit is not a hard money loan. It's long-term loan. But anyways, the property manager actually assumed I wanted to do heavy rehab in all the units. So occupancy stayed low, right? So occupancy, my property manager, so when I bought the property, remember 15 out of 20 were occupied. I only wanted to renovate 5 units, the 5 that were vacant, that needed heavy renovations. So when occupancy dropped to 7 out of 20, so I lost 8 tenants, the property manager assumed that, those 8 that became vacant, Steven wants to renovate that, despite me telling them multiple times, I only want to renovate the 5. So what I learned from this, you have to constantly remind your property manager of your strategy. You don't assume that they remember because they're managing multiple properties. So that I blame myself, right? That's on me. I should have said, hey, those 8, just get them rent ready and rent them out, right? Because of my assumption, it cost me 1 to 2 months, and maybe I'd be done by now, right? Instead of waiting until the second to last day before trying to refinance out of this deal. So, that's just kind of a lesson I learned, and hopefully you can learn from that. But the moment I notified my property managers, they started leasing out units in November of 2022. And for those of you who are new, it's so hard to rent out units in November, December, January. The holiday season is terrible because no one wants to move during Thanksgiving, Christmas, and the New Year. And people that do want to move, they're not going to be your best tenant base, right? So that's the unfortunate news. But I was so desperate because I want to renovate. I have 13 vacant units. I need to rent these out. So what did I do? I offered a move-in special, right? So I offered a $77 move-in special. You pay $77 plus the security deposit, which is 1 month's rent, and then you can move in, right? Great. Once I implemented that strategy, I was able to release out 4 units in 2 months, right? We advertised on Facebook Marketplace. We advertised on Zillow, all those places, right? Well, a lot of property managers don't know is Facebook Marketplace is a great place to advertise. So I always tell every property manager I work with, hey, advertise my unit on Facebook Marketplace. You have to link your personal Facebook account to it, but that's the new Craigslist, right? Everyone's on Facebook. Everyone's on their phone. And once she signed up for it, she's like, oh, wow, you're right. I'm getting so much interest. But anyways, when you offer a move-in special, just know that people will take advantage of the situation. And, I had one tenant move in. He passed the background check. Everything looked good. He passed income. He had quadruple the income. No bad track record. And, he paid the 70% move-in special. He lived there for 2 months, stopped paying for 1 month, and we evicted him. Right. So, out of the 6 that did the move-in special, I evicted 1. So just expect that. People take advantage of the situation, and I expected it because it's November or December, right? Like, you're not going to get a strong tenant that wants to move during that holiday season. So let's just fast forward to the apartment complex today. So actually, I need to update this slide, but current occupancy, I just talked to my property manager today, is 17 out of 20. That's 85% occupancy as of May of 2023. So we literally leased out, I think, 3 units just in May alone. And this is very common because in May, June, July, August, this is when families move or people want to move, right? So this is the time when it's easy to rent out units. The weather's a little warmer. It's summertime. It's easier to move, right? So at 17 out of 20, it's occupied. And why that's important, because when you refinance, they're going to ask you what your occupancy is. At 70%, you're borderline. At 85%, you're looking good, right? You're looking a little bit better because they assume occupants or vacancy is 10%, right? So if I lease out 1 more unit, I'm at 90%. Hey, that's pretty good. So I actually filled out 13 units of brand new tenants. So basically, I think I only have like 4 tenants from the prior owner after 1 year, right? Rents are now around, it was $7,200. Now it's $8,300. So I'm getting $8,300 a month in rent, right? With 3 vacant units. I have 3 units that are rent ready and being advertised. 1 unit that I need to renovate moderately. That one, I'm evicting 1 tenant. So, it was a tenant that I inherited, and he's only paying $250 a month. So, it worked out in a way. But once he leaves, I probably need to renovate his unit for about $5,000. My hard money loan is due May 12th. That's 2 days. And then I spent $120,000 of renovation to date. So let's talk about my refinancing options, right? So a lot of people ask me what banks I'm using. So it's Bank of the West. They financed my 26 unit. Initially, when I presented them the deal, when I first bought it, they didn't like the deal, right? They did not like the deal. My new loan I hope to get is $525,000, 7.25% interest, 7-year fixed, 30-year AM with a prepayment penalty. So 3, 2, 1. That means the percentage of the loan. So that's pretty good, right? That, about a year and a half ago, I was getting 4.25, 10-year fixed, 30-year AM on my 26th unit. A local community bank would be a new loan at cost. So what does at cost mean? It means that how much I bought it for, $350, plus how much renovation I put into it, $120. My new loan is $470. So it's basically a perfect BRRRR, right? I get back my down payment. I get back my renovation costs. If you look at the terms, 7.5% interest, 5-year fixed, 20-year AM. So not as good, right? Not as good as Bank of the West, but this is common with local community banks. Terms are not going to be as good, but they know the market because they're in Oklahoma. Stride Bank, I'm waiting to hear back from them, but I was quoted 8.5%, 3 years fixed, and 20-year AM. So it's not as good as the local community bank either. And then if I want to extend my hard money loan, which might be my option I have to do, is it for 6 months, it's a 1.5% fee of the loan, and they're going to raise my interest rates from 9% to 11.5%, right? So worst case, I can extend it for 6 months. If I think that interest rates may drop in 6 months, I don't know. I wish I had a crystal ball. Like, it could be worse, it could be better. It's really hard to know. But for me, these lenders are so fickle right now. Like, Bank of the West approved me, but just today they just said that, the underwriter, they changed their minds. They denied the deal, and then we're going to appeal. So how do you appeal the underwriter? What you do is you say, okay, the new loan was $525K, right? I'm all in for $470. That means I'm pulling out $50,000 on top of my down payment, on top of my renovation cost. I just said, all right, let me lower that loan amount. If they're concerned about my cash flow, they're concerned about my cash flow, right? The debt service coverage ratio must be greater than 1.2, and they do a stress test on your property. So I said, okay, let me lower my loan amount. What, 470? I'm fine. If you want to go down to 470, it's fine. A little bit less, I don't mind leaving money in the deal, right? Whatever. And what else I did was my rent roll increased, right? I went from 75% occupancy to 85. So now I have more cash flow. And if I lease out one more unit, today or tomorrow, I'll be at 90%. So I'll give them the updated rental and say, hey, my cash flow is better now. It's 8,300 versus 7,200. So just lowering your loan amount and increasing your rent roll, that's huge, right? That could get you to that debt service coverage ratio. And I have existing relationship with them. So they know me, they know my history with my 26 unit. So hopefully, fingers crossed, it goes through. But worst case, I just extend my hard money loan, or I got quoted another lender, same loan of 525K, but it's gonna be 11.5% interest over 30 years. So, I mean, I could technically pull out all my money, but at 11.5% interest, at that point, it's better to not have, the deal, right? You can, interest rate is supposed to be lower than the S&P 500, which is 8%. So 11.5, it's pretty high. So let's talk about the final numbers. So once again, I bought for 350, renovation 120, all in for 470. So the ARV at 700,000, I forced $230,000 worth of forced appreciation on this asset in 1 year, right? My rents were $550 per unit. If I use Bank of the West, once again, I pull up my down payment, renovation cost plus additional 55,000. That was my approval about a week ago, but it changed today, right? So today, maybe I can only pull up my down payment and renovation cost, or maybe I have to leave some money in the deal. But hey, if I left $50,000 in my deal, whatever, I spent $50,000 out of pocket to own a 20-unit apartment complex that's fully renovated. That's a good deal, right? If I use a local bank, same thing. Just pull up my down payment, renovation cost. So this is the reality. This is what I underwrote 1 year ago, right? So I'm being very transparent. I thought it would be worth $800,000, but I thought the loan terms would be 5% interest over 30-year AM. I did not expect interest rates to go up to, 7.5 to 11.5, which again quote today, right? And I thought I was going to cash out refinance $130,000 on top of my down payment and renovation cost, right? So $130,000 tax free is what I take home. What pharmacists take home, right? That's like pretty solid income. But because interest rates were a lot higher, my ARV went down, right? Because in order to hit that debt service coverage ratio of 1.2, if your interest rate goes up, your loan amount goes down to hit that ratio, right? So if my interest rate was literally 5%, I probably would have been right at around $800,000 for my ARV. But the fact that I appraised or getting valued at 700 with a 7.5 to 8% interest rate, I know I hit my number, right? So overall, what's the key lesson in this deal, right? You want to buy right of instant equity. So remember, I bought $50,000 instant equity, and I had the ability to force appreciation, right? So I'm all in for 470. I forced it to 700, which is $230,000 of equity, right? I thought it was going to be $330,000, but because I had such great margins, I can take a hit, right? The fact that interest rates went up, I can kind of take that hit. So, that's what I kind of teach in my YouTube videos as well as my mentorship is you can do this strategy in any market. Once again, I'm a little bit unlucky. Like interest rates are terrible right now. Like you read all the headlines, every time interest rates go up. Like I'm pretty agnostic to interest rates, but it kind of hits you when you're like trying to do your refinance, but it's out of your control, right? So I'm looking at, multiple options. Like if I don't want to extend my hard money loan, I have a bunch of lines of credits I can use to pay off this property, and I just pay my line of credit, right? So that's what I learned. So I kind of jumped ahead, but this is what I learned. So this is speaking from my experience in renovating, 45 units in 1 year. Renovation takes longer than expected and costs more than expected always, right? Hard money lenders can change their extension fees at any time. So when I first got my hard money loan, they said I can do a 3-month extension for free. And then a month before I'm due, I said, hey, can I get my 3-month extension? They said, oh, it's going to cost you 1.5 points, and we're going to raise your interest rates by 2.5%. Okay, they changed it. The scope of work. So remember, for my hard money loan, I got $100,000 for renovation, but they based that renovation off your scope of work. The problem is the scope of work is your best guess at renovation. right? But the reality is, when you start ripping out walls, you might find more issues. So if you have to repair those issues and it's not in the scope of work, you're not going to get reimbursed that money from the lender. So have reserves. Very key, have reserves, right? Once again, buy right, enforce appreciation. I hit that point earlier. Tenant turnover will turn over more than expected, right? Like, hey, I underwrite the deal. Maybe when you underwrite the deal, you think you're getting 8% cash on cash return. Well, the moment you take over, you lose 3 tenants. There goes your 8% cash on cash return, right? You have to constantly remind your property manager of your goal and be clear on which units should be renovated, right? Like, be very clear every week, however much is needed, right? I want to renovate this unit heavily with this, this, and this. This unit will be a basic turn, right? And then you want to ask your property manager, partner them, what can be done to rent these units faster? So they told me about move-in specials, right? They told me $77 move-in special, and I told them to advertise on Facebook Marketplace, right? So we learn from each other. That's the goal. And they know the market the best, and they know their tenant base the best. And, I just talked to my property manager today. She said that, oh my God, the new tenants are amazing. Like, they're no headache, no maintenance calls, and they pay their rent, for now. And there's been no issues. So it's a new tenant base, right? We kind of have to purge out the bad apples, the bad renters. Probably still have a couple more that we need to get rid of. But that's just common when you're stabilizing apartment complexes. So let me stop sharing here. So overall, basically that was a high level overview of my 20-unit apartment complex. I guess at this point, I want to kind of open it up to some questions. Any questions from anybody?
Hey, Stephen. Tim here. Thanks for sharing all of that. It's really cool to hear your journey and like the challenges that you faced, and like I think one of the coolest things was like how you got to the acquisition, right? Which was persistence, and then you like just knew how to negotiate and talk to that person. I guess my question is, in that process of like acquiring and operating it, I guess what were like some of the biggest time sucks, or like what would you have changed differently? Because it seemed like you did the underwriting correctly, right? Enough where you're not losing on it. So I guess I'm just wondering, like, what would you have done? What would you have changed about the deal then, with hindsight and everything?
Yeah, I mean, like, it was my third asset that I purchased. So I had prior experience.
Mm-hmm.
But I guess what I would change differently is being in more communication with my property manager. To be honest, I was juggling too many balls between my mobile home park, my 26 unit, my 20 unit, and I'm renovating all of those, right? And my mobile home park has the most money, or I'm putting the most money into it. So as a result, where my money goes, my attention flows, right? So of course, I'm putting my most attention on my mobile home park. I was making a lot of assumptions. So I think I would go back is, okay, number one, I want to do 3 value adds at the same time while working full time, right? I was so stressed out the past year, right? You wouldn't think that, like, when I tell people I own 90 units, people think like, oh, you must be like way loaded in cash flow. Yes, if all 90 are stabilized. That's the key point. If all 90 units are cash flowing $200 per unit, yeah, I'd have 20K a month. I'd be retired. But it's going to take me like, maybe 3 to 4 years to get there, right? And then when you force depreciation, you do a cash out refinance, your loan goes up, so your cash flow goes down, right? So it bites into your cash flow. So I think I would change that. Number 2, I would change is I wouldn't wait to the last minute for my cash out refinance, like what I'm kind of doing right now. I kind of made an assumption that my extension would be there. I mean, it still is, but I wish I maybe did the extension earlier when there's no fees.
They kind of did you dirty there, right? It sounded like.
Yeah, I mean, it was probably in the contract, to be honest. I probably just signed it and didn't look. They're covering themselves, but I would say it's on me a little bit. I take ownership. I don't blame people. I don't point fingers.
Yeah.
But and then in terms of renovation, there was a period where after I renovated 5 units, I was kind of testing the market, what the rents would be. And I told my contractor, hey, like, I might need to put you on pause for a little bit So I want to see what the rents are to know how to renovate, because you don't want to over renovate properties. So you never want to spend $20,000 to renovate a unit that gets you $500 in rent when you can spend $5,000 and get the same rents, right? It just makes no sense. So that's what I changed differently. But overall, I'd say like this deal was like, minus my hiccup with the cash out refinance, I say it's pretty smooth, considering that it was probably like I call it the second child that's kind of neglected a little bit. Like, considering that it's been neglected and I'm working full time, I'd say if I can hit this cash out refinance even at 7.5%, like, it's a home run deal. I mean, I get all my down payment, all my renovation costs. In 3 years, if interest rates lower, I'm gonna do another cash out refinance.
Yeah.
Lower it again, pull out more money. So I'm in it for long term, right? So like, to me, that's why you still got to work, right? Like, I still got to work, still bring in cash flow for myself, but slowly build up assets, right? I'm not dependent on this.
I don't know if I missed it, but what was the biggest challenge for your cash out refi right now, like getting your bank financing done?
The challenge is I had a whole slide on it, but it's just like, it's a smaller market, it's a tertiary market. The population's kind of small. The rents are a little bit too small. The price per unit's a little too small. The loan's too small. So it takes a certain appetite for a lender.
Right. Yeah.
And the lenders are just so like day by day. Like, one day they say something, they approve it. The next day, like, oh no, we're changing your mind. So it's just a very like emotional roller coaster. So, to me, I just said, hey, I might just bite the bullet. Hey, I'm getting $8,300 a month, even if at 11.5% interest only. My loan is around 4,000, right? So I'd say it's probably a break even. At best, let's say, 4,000 for my expense and 4,000 for my loan, I break even. If I rent out the 3 remaining units, that's my positive cash flow. But that's okay. I just want to ride out until I can get better loan terms, right? So that's kind of my strategy. And this is not just me, it's everyone struggling right now. Like, I'm literally at the worst time right now. Like, this is probably one of the worst times to get a new loan, right? Yeah. Especially, I have other things working against me as well. So I'm just persistent with Bank of the West. I said, hey, I feel like I can get them. So I say, dude, I just rented out 2 units in like 3 days. Like, at this rate, I have 3 more rent ready units. I can almost get this to almost 100.
Yeah.
At this point, what else do you want? Like 100% occupancy? Like, geez, like how strict can you be? And like, I have a relationship with them. Like, do you want to do business with me? Because I'm going to scale. Like, I'm in my 30s. I have 90 units. Like, come on. Like, the next 10 years, I could probably double whatever I bought, whatever, yeah. Right? So, it's really the relationship. My credit score is good. My DTI is garbage, unfortunately, because I own a bunch of single family homes in California. But all my single family homes have like $600,000 plus of equity. So eventually I can 1031 those into a bigger apartment complexes, so, but yeah, that's my struggle right now. And I'm basically like in my lunch breaks calling all these lenders. Like, I just reached out to 2 more local banks and, just keep the conversation open and update them. Hey, like, here's my updated rent roll. I just rent out 2 units. I'm not sure if this changes your mind, but I'm making progress. Hey, I'm like, if you give me money out, I'm going to renovate 6 more units. That goes back to the bank, right? Essentially, because I'm putting money back into my asset. So it's safer for them. So, I mean, you just want to seem as low risk as possible. But, despite all that, you just have to go and just keep on reaching out to multiple lenders. Like, even I'm still reaching out to more and more and see who bites.
Yeah. Thanks for sharing, Stephen. I appreciate it. It's really cool to hear your experience.
Cool. So I see a question in the comments here. So when I first entered Region, how do you find a chartered contractor? Easy. So I asked my property manager, hey, who do you recommend? Give me 3. Yeah. And she recommended me my current guy. In the beginning, I think so when you work on contractors, the best contractor is going to be cheap, fast, and what was that last one? They're going to be cheap, they're going to be fast, and they have high quality work. The reality is, pick 2 of the 3, right? So my guy was quality but expensive, but fast. So when you're on a hard money loan, 12 months, what do you want? You want speed, right? So I paid for speed, and what happened was he ran into my 5 units. And I said, you know what? I'm not getting as much rent as I thought, so maybe I'll reevaluate if I want to renovate these as much, right? So he waited a month, and then at that point, he reached back out to me and said, hey, like I'll lower my price. I'll lower my labor costs if you let me renovate the rest of your units. And I said, okay, perfect. Then we went above, right? So if you see in one of my YouTube shorts or my TikTok, Instagram, I have like I took pictures of my actual like bids. Like he wrote on a piece of paper, like a literal paper and pencil. He wrote it, and if you looked at it, it was always like if the supplies was 1,500, the labor would be double. So supplies is 1,500, labor is 3,000. So it's about 4,500 to renovate the unit, right? So what was my renovation? Usually new flooring, LVP flooring, fresh coat of paint, resurface the kitchen cabinets if they're still good, reglaze the bathtubs or replace the bathtub with a bathtub kit. You can buy them at Home Depot for like $500. You can buy new vanities at Home Depot. It's like $200. So, pretty like basic cookie cutter stuff. Like if you look at all 4 or 5 units that I renovate, they all look the same. Like, like LVP flooring, white paint, white or light gray or medium gray paint. I reglazed the kitchen cabinets. It's all cookie cutter for economies of scale, right? It's easier for you, easier for the contractor. You buy in bulk. So it's just smart all around. So that's how I do it. So for me, you try before you buy, right? So when my contractor, he renovates, I have my property manager inspect it because they always inspect it before renting it out, right? So they would come in, take pictures for me. I'm in California, it's in Oklahoma, I'm far away. They'd send me progress photos, updates. I'd ask my property or my contractor, hey, I pay you or my general contractor, how I paid him was if it costed $4,000, I pay half up front and I pay the second half when he's done. Right? So before I pay the second half, I have my property manager go in and inspect everything. So you trust but verify, right? So you can't bullshit me, right? My property manager comes in, they take pictures. I ask my contractor to take videos, take pictures for me. So I use it as content, right? It's free content as well. So that's what I did. And once I built that trust with him and I knew that he was doing a great job at a reasonable price, I gave him more business, right? And I told him, hey, those 6 units that you didn't renovate, when they go vacant, I'm going to call you, right? If you do a good job, I have my 26 unit where my contractor is slow as hell. I'll send you over there, right? You can help speed that one up too. And I'm going to buy more real estate down the road, right? I'm in the process of selling my mobile home park. Hopefully I'll close on Friday. So I have selling my mobile park as well as a cash out refinance. I might fall into a larger windfall of money. The money I put into the deal, I get back out. Might want to buy more assets, right? And then I'm gonna need someone to renovate it, and I'll put you in there to renovate it. So you have to just make it known that like, hey, like I want to scale with you, and let's just work well together. Like I'm great to work with because I pay you on time, right? I don't mess up people's money. I pay you on time. I communicate with you, and I respond fast. So that's how you work with anybody. And I learned that from my W-2. Right? I'm a pharmacy director. I manage like 50 people. Same thing, right? Translatable skill set. So does that answer your question?
Yeah, that was my question. Thank you. Thank you, Stephen. Just overall, thank you for the sort of transparency and the learnings through the whole thing. I've actually got a couple more. I want to go back to the lending really quick. So I'm out here in the LA area, San Gabriel Valley. I was doing that locally until the rates went up, and I'm kind of just sitting back and watching for the moment. One question that I have as it relates to the lending is for the lenders that you're talking to for the takeout loan, what are their requirements in terms of the P&L timeframe and basically the P&L curing timeframe? Like, are they looking at your last 3 months, or are they saying, we're going to need 6 to 12 months of history and a rent roll to get a sense for this?
Yeah. So you're referring to the stabilization period. So, for me, I just gave them all the rent rolls I had since I owned the property, which has been about a year. But they typically want the most recent one and then your most recent rent roll. So typically I will give them my whole P&L. I'm pretty transparent, right? Here's my whole P&L and here's my most recent rent roll. And I tell them that, hey, I'm renovating, I'm turning around these tenants, right? Like I'm turning around, and it's impressive. Like what I've done is impressive. Like I literally I renovated 14 units and leased out 14 units in like a year. And this is not even my main focus, right? This is like my second child that that I'm paying attention to. So and then I hit higher rents than I thought, right? So it's just telling a story. Like loan officers need to share a story to the underwriter. If you're talking to smaller banks, so all the banks I listed, Bank of the West, they're a mid-sized bank, the local community banks. Usually, you're talking to the president, the owner, right? So if you can sell them a story, sell them your experience, that's how you do it, right? Like, hey, look, I'm actively advertising these units. We just had 4 people view these new units yesterday. We had 3 applications, and we approved one, and maybe one will take it, right? So you just kind of share them your process, and if they're still skeptical, you just constantly, it's the follow-up, right? Like, hey, lender, like, hey, Bank of the West, I just leased that one more unit. I'm at 90%. Oh, I just leased that one more unit. I'm at 95%. Hey, I'm renovating this unit right now. So you just kind of keep them in the loop of what you're doing and just be transparent in the process, right? Like, I'm not trying to hide anything. It's just be transparent, and it shows. And people like working with people like that, right? Because unfortunately, you get a lot of crooked people. I can fabricate a rent roll. That's mortgage fraud. But I mean, if push came to shove, I could do that. I don't want to. I'm honest. I just said, hey, like, this is it. But I'm planning on getting to 90, 95%. Obviously, I want it rented out because I get more cash flow. I'm not going to say no to $1,500 a month extra.
Right.
So, that's just kind of it. So, but the lenders, they ask for a lot of documents, and you want to give those documents fast, right? So they want like tax returns, right? My tax returns are shit, right? Like, even though I have a high income W-2, and a lot of my real estate's kind of negative, right? Because I cashed out refinance like a large loan out of one of my single family homes, and I'm renting that one out at a negative. Took that money and bought 3 value add assets that I currently own, right? So if you follow my journey, I bought 80 units in 8 months. And I had an offer that got rejected. I almost bought like 150 units. I'm glad I didn't get the 4th one. I'd probably be bankrupt, right, at this point, or be admitted to a psychiatric hospital. But that's just kind of that's why my tax statement doesn't look good. And I explained to them, hey, like, I buy value add real estate. Like, of course my tax return is not going to look good, but I have a high income W-2. Right? So, and then because one lender told me, we like the property, we don't like you. I was just like, what? Like, in apartment complexes, you look at the property, not necessarily me. Like, my credit score is amazing. I have 800 credit score, right? And I work a W-2. Yes, I have some, real estate that's like heavy value add, but I told him I'm trying to sell my mobile home park. If I sell it, I'm probably gonna get almost $1 million back in my pocket, and that's not gonna be a negative on on me anymore, right? Because it was a fix and flip mobile home park. So like, and then my 20 unit's gonna be stabilized, and eventually my 26 unit. I mean, that one I'm getting $9,000 a month, and I have 10 vacants, and I'm renting those out for $700 each. 700 times 10, 7,000. That's all positive cash flow.
Yeah.
So just like that, I could go, $7,000 positive cash flow once I start renting out these units, right? So it's they know, but it's the bank, right? So it's just the bank. So when they say no, that just means ask another lender. So that's what I kind of teach my students in my mentorship. Like, no just means ask someone else, because each bank has a different appetite. It's just like a going on dates of girls, right? You ask like 20 girls, one might say yes, right? Different appetite, whatever. It's a numbers game, it's persistence. And when you engage lenders, you learn more and more, right? I know what they want. I have my documents ready. So it's so impressive. I literally just say, hey, what documents do you need? I'll send you a link to my Dropbox. I already have all the documents ready in there. Whatever you want, based on multiple lenders, I already have that all in there. And like, they're impressed because I tell them the story and I have all the documents. So it's unfortunate. It's like, back in the day, you wear a suit and tie, you walk in and try to look impressive. It's kind of the same thing today. So
yeah. Cool. Yeah. What I take away from that is, you're showing them your current financials and your current story, but you're telling them what the future is going to look like and updating them and progress along the way. So,
yeah.
And then one more question while I have you. So going back to the tertiary market, the lending in the tertiary market and the connection to that, now that you know that, are you planning on moving markets and or buying a bigger building so that you're not, kind of stuck in the place that that you are right now? What's your pivot, given that you've now learned that?
Yeah, that's a great question. I thought about that myself. Like, probably the next deal I want to take down is probably like a 50 unit myself, because I'm selling my mobile park. So I'm going from 90 to 50, and then I want to buy another 50, go back to 100. After I give myself a break, it's really stressful doing all that.
Take a vacation.
Yeah, exactly. Like, I go on vacation and I just went to the Philippines, came back, but then the moment I'm flying home, all the stress and anxiety hits me it slaps me in the face, right? But anyways, like, looking back, I probably would want to scale in Oklahoma City, which I have my 26 unit. Like, I literally get calls every once a month getting offers unsolicited on that deal. I bought for $500,000. I'm getting $1.5 million offers like right now, right? Because people want 1031 out of this. And I'm biting. I'm saying, no, I want to hold on to this because I want to do a cash out refinance, right? Like, I'm in it for the long term, right now. And I'm renovating it. It's a good asset, nice C-class apartment area. So honestly, when I actively looking, I'm gonna send letters out, prop stream, yell letters complete. I have links in the video, in the future. But I'm gonna probably do all Oklahoma. And my answer is, ideally, I do want it in Oklahoma City or Tulsa, which is the bigger markets. But if I have another good deal in a tertiary market, like if it's another deal in Enid, like, I'm not going to say no to it. Like, if it makes sense, I'm not going to say no to it. And at least I'll have my lenders in line, right? So actually, it was funny, like my 20 unit, I was making offers on a 50 unit that was nearby my 20 unit, kind of. And at the time, I was a beginner and I was too focused on, like, because they had extra land where I can build another 20 units. I was so caught up in the development side of things. I ended up just like talking myself out of the deal. And I'm kind of kicking myself to this day because it was 2.5 million, 50 units, 50K per unit. It's a little bit pricey, but all 50 units are Section 8. So literally on the first of every month, without any question, the owner got $35,000 into his account on the first every month automatically. And I used to think, Section 8, they pay a little bit less, but like, just the peace of mind of knowing on the first of every month, you get 100% collections, that's like worth it, right? So I wish, like, know what I know today, I was like, oh, I wish I negotiated, because you wanted to sell it to, develop duplexes. I wish I bought it, but I had them seller finance a portion of it. Like, I could have, let's say 75% loan from Bank of the West, and then the remaining 25%, he could have held a note for me, and I could have bought that with $0 out of my pocket. He owned it free and clear. And at the time, I didn't really know much about creative financing, right? This is about me about 2 years ago, right? So I'm not that much further than you guys, right? That's why I keep on telling on my sessions, like, yes, what I am today is impressive, but like 2 years ago, I was not that. I just had about 5 single family homes the past 2 years. That's when I scaled to 90. But yeah, I keep on thinking, the one that got away, but anyways, yeah, ideally Oklahoma City, good property management there. But if I find a good deal in a tertiary market, I might take it down myself, or maybe I'll just wholesale the deal. If I don't want it and I get it negotiated well, I'll just wholesale it and take like, I could have wholesaled my 20 unit, probably made $50,000, right? Because it appraised that 50,000 above it, and it's easy to justify it to, someone else. So, especially people in California, where we're based, like, come on, 400,000 doesn't even get me a condo here, right? So in San Francisco, it gets me like a little hut under a bridge, not even a house. So yeah, that's kind of my experience. I would say it really depends on where the deals are. Like, I don't pass on good deals, but definitely if I can get a 50 unit in Oklahoma City, that would probably be my sweet spot. And Oklahoma City is around 65K per unit. So if I can buy it for around 35K to 40K per unit and put in 10K, that's my margin, right? So that would be my deal that I would want.
Cool. Well, thank you, Stephen. I just discovered you yesterday, so I have a lot of YouTube videos to watch and look forward to more insights from all your projects. Thank you.
Yeah, no, thanks for hopping on, and continue to join the sessions. And I post a bunch of videos. I took a little bit of break because I've been so busy, but I do try to post a lot. I just talk about my experience. But before that, I think I saw another hand. Any other questions? Is it Penny?
Yeah, hi. Hey, Steve. Thanks for doing this. My question is, so you mentioned you used PropStream to find this. Were there any specific filters you set when you're trying to find properties that worked for you?
Yeah. In the mentorship, I have the whole template of I did for it, but at a high level, off the top of my head, it's there's criteria for like apartment complexes. It's like I think 100 plus units, residential real estate. It was almost like 10 categories, like duplexes or above, triplex or above, quadplex or above. I think 5+ units, garden style apartment complexes, high rise apartment complexes. Um, I think residential income. It was like 10 categories, and I would those categories. But what you want to do, and what I teach is go on LoopNet, grab an address of a apartment complex in your market, and put it into LoopNet, into PropStream, to see how it's classified. Because each county classifies apartments different. Some might be apartments, some might say commercial. But just know that if you click commercial, you might get some like, retail strip centers, industrial centers when you send out your mailers. It's very common, right?
I see.
So that's the criteria that I use. And then for my lettering campaign, I don't have any letters anymore, but if you check my other video, I use the invitation size envelope. It's A2 size envelope. And you want to just handwrite the owner's name and address. Don't put your face in the front, put it on the back, because it makes it look like the invitation card. And then when they open it, they get your letter, right? So I have this letter template that I use, and then I have a handwritten like, hey Kenny, I want to buy your apartment complex. Call me. Here's my phone number. Here's my address. So the whole point of the letter is to get them to call you, right? So if you're here earlier, it's $1.80 per letter, and when you send out letters, it's about a 3% response rate in a hot market. In a normal market, if it's a hot market, California, Texas, a 1% response rate. So if you send out 300 letters, 3 people might call you. Right? I was getting around 9 to 10. So but then like the big picture, right? I sent out 1,800 letters. I spent $3,000, about $4,000 for those letters. But just on my 20 unit, I made $50,000 instant equity day one. My 26 unit, it appraised at $250,000 above what I bought it.
Oh, wow.
So I spent $4,000 to make $300,000 of equity day one, and have the ability to double both these apartment complexes at least. My 26 unit, I'm tripling it from $500,000 to 1.5. My 20 unit, as you saw, 350 to about 700. So that's the power. Like people knock on letters, but like to me, it's more. I like it. I do letters for some people in my mentorship, but basically, like I like it because I just send the letters out, and then they just call me. The hot leads will call me, and because I'm working full time, I don't have time to like cold call people or cold text, right? And I don't want to pay a virtual assistant to do that, so I send a letter out, and then so I've had luck with it. I've heard mixed reviews about it, but for me personally, I done well with letters, so I advocate for that, and I should have some more content about that, but I do have one video talking about my direct mail campaign, so check that video out on my YouTube channel. And happy to share more about it.
Okay, yeah, cool. Yeah, I just discovered you literally earlier today, so I'm gonna go check that out tonight.
Yeah, I have like 50 videos, a lot of sessions talking about stuff. I've been interviewing people more recently because these sessions have been dying. But yeah, thanks for hopping on.
Okay, cool.
I see a question for Karen. You have a question, Karen? Oh, I think you're muted. Let me see. Unmute yourself.
There we go.
There you go.
You might have answered my question already. I was wondering about do you find like I've heard other people talk about direct mail. I mean, are you competing with other people who are direct mailing these owners, and is that like a saturated way of finding opportunities?
Yeah, I mean, honestly, most of these owners that I'm sending letters to, they're getting hit by letters, cold call, cold text, cold email. But to me, it's the right time, right place, right person, right? So when you send a letter out, they may not be motivated at that time, but maybe in 1 year, I work in healthcare, right? So I see people die on a daily basis, unfortunately. There might be death. There might be disability. There might be disagreement with partners. There might be divorce. And now they're a motivated seller. So you just have to be there at the right time, right? And then also the key is you want them to talk to you, and that's when you build a relationship, right? Because I'm some random guy from California sending you a letter, right? You're in Oklahoma. There's not going to be much trust there. So I leverage the fact that, pharmacists, we're technically doctors. So I'm Dr. Stephen Nguyen. I write down my letter. I write Dr. Stephen Nguyen. I leverage, it builds trust, right? Oh, he's a doctor, right? He seems trustworthy. Number one. Number two is, well, he might have money, right? Because they associate, people in healthcare, doctors as having money. So, that's what I did. So it's just right time, right place. And like I said, a lot of people will call you. They're fishing. I call them fishers. They just want you to overpay for them. Hey, you're a rich guy in California, overpay for my property, right? Those are not motivated people, but the people that I closed on, I could tell immediately that they wanted to sell, that they were, and how you can tell is they just give you information very fast. They're very transparent and they communicate very regularly. Like you shouldn't have to pull teeth to communicate with these people, right? And then they see you, they're like, hey, I like this guy. We built trust over time and he's transparent. Like I'm super transparent. Like when I make an offer, like they're like, oh, like why is that your offer? I'm like, that's the tax assessed price. Like here's a screenshot of the tax assessed price. They're like, oh, how'd you make that offer? Oh, I just did sales comparables of 3 apartments nearby that sold for the last year, and they're selling for $30,000 per unit. So here are the property addresses, here are the sale dates, here's the sales price. This is the price per unit. That's my offer, right? So you just transparent, and just making it seem easy. Like, hey, like obviously now at this point I own multiple apartments, so it's easy. Like, hey, my apartment complex is 3 miles away from yours. I already have property management. I have an asset. You can go see my property if you want to, right? I can do that now, but when I was starting, I couldn't. So I just said, hey, my property manager, he's been managing the area for like 30 years, and I'm going to use him. So you leverage whatever you can, right? Or if you're part of like a mentorship or something, you can leverage your mentor, right? That's someone more experienced than you, or partners. If you have partners, you can leverage them as well. So, it's a numbers game, right time, right place. You just have to be consistent with it. A lot of my people in my mentorship, they get discouraged after sending 3 batches. I'm like, you expect to send mailers at least for a year to get any results, because people, they take the letter, they throw it into a cupboard, and when they do spring cleaning, they pull out the letter like, oh, I'm motivated suddenly to sell, right? So you have to be, it's just the price of doing business, right? I tell my students, you need at least $600 per month for your marketing campaign. And honestly, if you can't afford that, you shouldn't be buying apartment complexes. At that point, you shouldn't be buying apartment complexes. Maybe learn to wholesale real estate or just do something else, right? Like if you can't afford $600 a month for a marketing campaign, you shouldn't be doing apartment complexes where the bigger fish play, right? So, and I'd say $600 is not terrible, right? That's not even that terrible. You just have to be consistent. But a lot of my students get so discouraged. They get so discouraged. When they don't get any responses and they're not persistent with their hot leads. I said, when someone calls you, you literally spent $600 that month to get 3 people to call you. You better treat those people that call you and be persistent with them. Like I still, like when the moment I'm active again in buying, I'm gonna reach out to the contacts that called me before first, so that if in case they want to sell, because at the time, maybe it didn't work out for whatever reason, but I have a bunch of people that had 50 unit, 80 units. That's what I kind of want to buy now, or when I'm ready. So I'll reach back out and say, hey, like I'm looking to buy again. Like, you want to make a deal happen? So, yeah, I would say it just takes persistence, and you have to be consistent with it to get the results. It's discouraging, but one deal is all it takes to change your life, right? Like I can pull out, basically like almost, how much am I pulling out? About $250,000, assuming my cash out refinance goes through. That's tax-free. I just can sit on there and leave my job and coast for like a couple of years and do whatever I want. So, but it's not gonna be easy, right? It's not gonna be easy to do it. And this thing's gonna rent out for $10,000 a month once it's full. And there might be a little cash flow in the deal, right? Like there's probably gonna be a little cash flow in the deal. So it's a long-term game, but you make the most wealth by forcing appreciation. cash flow will come later, right?
Yeah,
So
understood.
that's how I'm gonna play the game.
Thank you so much. I also discovered you today, like everybody else has spoken. So it's been super informative and watched a few videos. So thank you for educating us.
Cool. Well, I know we went a little bit over, but any last questions that anyone had that's burning? If not, then I will sign off and thank you for hopping on and hope to see you in the next one. Thank you so much.
Thank you. Bye.
Bye.